Our Global Listed Infrastructure Fund invests in listed companies who own, control, and operate critical infrastructure assets for the benefit of the economy and for the society at large. We identify the asset first. What is the quality of the asset? How sustainable is it? Can it generate very long-term, reliable cash flow streams for the benefit of its users and ultimately the investors? And then we seek to only invest in companies with strong governance, in very high-quality regulatory environments, and with companies that have the ability to grow their dividend streams over time. The main risks to the equity values, as we've seen in the last couple of years, has been negative interest rate sentiment. And while that hasn't necessarily affected the businesses themselves, because many of them tend to thrive, in fact, in a high growth, high inflation environment, which comes with higher interest rates, the equity values can be pretty severely punished. And that has given rise to significant opportunity. Well, we invest in fixed physical assets. Without exception, they tend to have local impact, whether it's on the environment or on society. Sometimes that's positive, sometimes that's negative. They are also potentially exposed to climate change related events, things like forest fires, floods, freak storms, for example. So we need to assess those assets' ability to withstand those kinds of outcomes, while at the same time ensuring that any impact that they may have can be measured and mitigated. This is a fund that tends to have a lower volatility and a lower drawdown than the broader equity market. So where it really shines is in periods of very difficult market environments. We haven't had very much of that of late, but it does happen, and that's when we would expect the fund to perform well relative to the broader equity market. But when you don't need it, it's delivering a steady and growing income stream and providing that consistent, reliable return that long-term investors seek.